Well, hello, good people, and welcome to the webinar. My name is Bob McElroy, and I am a trainer with Sage University, and I'm delighted to be with you today. And here in the control booth with me is Ann Doney. We're lucky to have Ann here with us today. She is a CPA at our headquarters, and she is also the one who makes the key decisions about what goes into the Sage Fixed Assets suite of applications. Also, I'm privileged to have with me my friend and colleague, Ed Williams, who is a Sage sales engineer. And what we're going to be doing is presenting what is new in this Sage Fixed Assets version 2024.1, which was released just last week. Now, we want to try to keep this within 1 hour. And I'm going to try to reserve some time at the end of the webinar to answer questions, but listen, I may not have time to answer your question. And if I don't, I will send you an email with an answer. So be sure to, in the dashboard, you can see there's a place there where you can ask a question and we will get it recorded. Also in the dashboard, you will see that there's a handout available to you. And this is a handout that includes all of the slides that we're presenting today. So I encourage you to download a copy of that for yourself. So here's what we're going to be doing in this webinar today. We're going to cover the tax updates, and you can see here on this slide the different topics that we want to cover with you. There are also some key enhancements that we're sort of excited about, and we want to explain these to you as well. And then we're going to finish up with this new feature called asset maintenance. I say new, it was actually added to the tracking program late last year, and some of you may know about it already, but maybe not all of you, but we'll cover that at the end of the webinar. So let me begin here with the depreciation program. And when you first launch the depreciation program, you're going to see this splash page like you see here. And it will list all of what is new in the program for this new version. Now, this is going to show up every time you launch the program, and you may get tired of seeing it. Look in the lower left-hand corner, and there's a place where you can add a check, and it will stop displaying after you add that check. When you click the OK button, you'll go to this next splash page. Again, it's promoting some of the key things that that's new in the program. We want to make sure that you're aware of these things. And again, when you get tired of seeing that, you can put a check down there in the lower left corner. One of the things that's new in the program is the Sage Resource Center. And one way that you can access it is through the Assistant Center function, which is found at the bottom of the navigation pane. And then you'll click on that bulleted task up above that says Resource Center. And when you do that, it's going to open up your browser, and it's going to take you to this new Sage website called, as you can see here, the Resource Center. I want to show you this, so I'm going to step away from the PowerPoint. And I've got my depreciation program open, and you can see this is the splash page I was telling you about. I'm going to click Close, and then this is that next one I showed you, and I'll click OK. And now I'm going to go to the bottom of my navigation pane. You can see these 4 function buttons, and I'm going to click on Assistant Center. Now, when I click on that, as you'll notice immediately, the bulleted task list changes, the working area changes, because all of this is geared to providing you with help resources. By the way, the very first bulleted task says Sage Community Hub. Some of you may remember that as Sage City, but not long ago, we changed the name, and so now it's called the Sage Community Hub, but you might still think of it as Sage City. But the third bullet down there is the Resource Center. When I click on it, it will open up my browser and take me to this website. As you can see, it's got these 3 icons up here at the top, but the options are found down below. And so when I scroll down here, you can see you've got links to that Sage Community Hub I was just telling you about. Over here on the right, you can see links to accessing the SAGE knowledge base, where you can find KB articles. KB stands for knowledge base. That will show you how to perform various functions or procedures in the program, and a link to how you can update your software and so forth. So all that is available here. Scrolling down further, you can see a link to a web page that will provide you with year-end procedures. You might want to take a look at that at the year-end close. Over here on the right, if you've got a problem with the software, this is a way of getting some help. Down here at the bottom, you've got links to the SAGE University. And over here on the right, it says services. However, if you click on this link, what it's going to do is going to take you to a KB article, like I just mentioned to you, that will give you information about how you can work with your account. So that is all available there on that community hub. I mean, on this SAGE Resource Center. Let me go back to my PowerPoint here. And let me get into the tax updates. Before I cover the tax updates, let me talk about the audit advisor. The audit advisor is helpful in terms of ensuring that your tax reporting complies with current tax regulations. And I think that is the main usefulness of this. Although there is a secondary use, it helps you to maximize your deductions so that may give you a lower tax liability. So that may be helpful to you as well. This is really of no use when it comes to financial reporting. And so the book that you're going to run it against would be your tax book. And you can run it for any given year. And so here I'm showing you a screenshot of what it might look like for last year of 2023, as you can see. And it's divided up into different review areas, and the number of different review areas might vary from one year to the next. And then if it finds assets that may not comport to tax regulations, it will put those assets into a group. Like this first one, you can see there's sort of a red flag on it. I have some assets that were not using a maker's method, and it found those and put them into this group for me to check out. So this is the thing that the audit advisor does. It doesn't really change your asset records. It just puts them into a group for you to look at them. And then you are the decision maker. And so if you look it over and you decide, hey, I need to make a change to that asset record, you may need to then recalculate depreciation before you file your tax return for that year. Or maybe you'll look at it and say, no, that is the way I want it. Well, anyway, these review areas have been updated, and so that can be helpful. Now, at the beginning of every year, we come out with a new version of our software, and it's identified by the calendar year with the extension .1. And so that's what was released last year, 2024.1. And that will include all of the tax forms and worksheets that you need to file your tax return for last year. One of the things that you may notice on this slide is that you can now run the IRS form 4562 for the past 2 years. And so that would mean now for both last year, 2023, and the year before, 2022. And when I say run this 4562, what I mean is it will produce a fileable form that the IRS will accept. Actually, this came out late last year, but you still have it available here in this version. Now, as you know, there are limits that apply to depreciating our assets. And some of these limits are indexed to the inflation rate. And this is thanks to the Tax Cuts and Jobs Act that President Trump signed into law back in December of 2017. And one of the areas that is indexed to inflation is the Section 179 capital expense deduction. And so the amount that you can deduct under Section 179 has been increased for this year to, as you can see here, $1,220,000. But the investment cap has also been increased, and that amount this year is $3,050,000. I'm not sure that everybody understands how this works, but it's a bit complicated. There is a phase out process that takes place. And so here's the way it works. If you buy assets, these are assets that qualify for Section 179 expensing, and that amount reaches $3,050,000, or it's less than that, then you can take the full amount here that you're entitled to, $1 million. Exceed that figure, the deduction is reduced by $1. And so there's a phase out that you can reach where you're no longer going to qualify for any Section 179 expensing. And so I'm going to add these numbers together, and that will give me that threshold. And so now that threshold is $4,270,000. And so what that means is if you buy new qualifying assets that reach that level of $4,270,000, at that point, you completely lose the 179 deduction. There's also a deduction that you can apply to the purchase of an SUV. An SUV would have a weight between 6,000 and 14,000 pounds. And that too is indexed to the inflation rate. And so now we're up to $30,500 for this year. Now, there are depreciation limits that apply to light vehicles, and these too are indexed to the inflation rate. On the slide, you can see that you have a way of identifying light vehicles. The A represents a passenger automobile, and a T represents a light truck or van. Technically, a passenger automobile is a automobile that has a curb weight of 6,000 pounds or less. A light truck or van is built on a truck chassis, but has a gross vehicle weight rating, a GVWR, of 6,000 pounds or less. And I point that out to you, and the reason why we had these two different property type codes is because in the past, those limitations were different. And actually the limits were higher for a light truck or van than they were for an automobile. And that was the case up until and through 2017. But in 2018, those depreciation limits merged into one table. And so now it's the same. It doesn't matter whether it's an automobile or a light truck or van. And that's why I think of them as light vehicles. So if you have a vehicle that has a gross vehicle weight rating of 6,000 pounds or less, then it's subject to these depreciation limits. Well, they have been raised because of the inflation rate to the figures that you see here. And so the first year that you put the vehicle into service, this year it's $20,400 if you take the bonus. And if you don't take the bonus, it's $12,400. $20,400 if you take the bonus, $12,400 if you don't. Now there are limits that apply to every year of the vehicle's life. They vary depending on if you're looking at year 2, year 3, year 4, but in year 4, that limitation stays for the remainder of the vehicle's life. Well, now those are coded into the program if you're using 2024.1. 168 bonus depreciation drops this year in accordance with the law, because when the Tax Cuts and Jobs Act was passed, the bonus depreciation was intended to be temporary. And so they set out these this step down, as you can see in this table. So last year we were taking 80%, and this year it is 60%, as you can see. Next year it'll be 40%, unless the law changes. And you know, that could happen. The law could change here. In fact, there's a law proposing a change to this right now, and Ann is going to speak to that in just a few minutes. There are a couple of special categories, and I put that here on this slide. They're treated a little bit differently, and so last year they got 100%, but now this year it's 80%. One of the other things that was done to our software was to help allow a quicker entry of QIP assets. Now, as I say that, you may be thinking, QIP, what is that? Well, it stands for Qualified Improvement Property, and that was a definition that came about through the Tax Cuts and Jobs Act. So to qualify as a QIP asset, it must be placed into service after the year 2017. It is an improvement made to the interior of a non-residential building, and the improvement is made sometime, anytime after the building was placed in service. Now, there was some oversight in that bill when it was first enacted into law, and it was corrected by the CARES Act of 2020. That's a bit odd because, of course, the CARES Act, as you remember, was intended to provide COVID relief, but it also included this obscure provision here that affected QIP assets, and it was retroactive back to 2018. And so what it says is that QIP assets are depreciated over a 15 or 20-year estimated life, depending on whether you're depreciating it over GS or ADS. It uses a half-year or mid-quarter averaging convention, and it also qualifies for first-year expensing under Section 168 and 179. And so the program has been improved to help recognize this kind of an asset and help you set it up. And I think what I'm going to do here is just show you. Let's see if I can do this somewhat quickly. Okay, I am going to create a new asset, and I'm going to call it QIP asset. And now for the property type, it defaults to P, of course, when you're creating a new asset, personal property. If I click on the drop-down arrow, I want to select R for real property. By the way, you can see here the other two property types I was telling you about earlier, the A and the T for light vehicles. But here I'm going to click on R, and I'll tab. And I'm going to put in a placed in service date of this year, and I'll put in an acquisition value of $1 million and tab. Now notice that this defaults to Makers 100. This is akin to a straight line method, and there's no bonus, and it's defaulting to a life of 39 years. So if we were putting into service a non-residential building, we might accept that. But I just told you that QIP assets could be depreciated over 15 years, and 15 and 20-year class property are authorized to use Makers 150, a little faster acceleration of your depreciation. And so I could change this to Makers 150, and I could select the one with the bonus, you see, because remember I said it qualifies for bonus depreciation. So I'll go ahead and select that, and now when I hit the tab key, I get a warning reminding me that bonus only applies to assets with a 20-year recovery or less. I'll say okay, and then it defaults to the year 15 years, and that's correct. That is the correct life to use. If I was to click on this, you can see in the lower right corner, it looks like a hyperlink. It says IRS table. If I click on that, it will open up table 1 of commonly used assets, and I can look up the recovery period as set by the IRS for various assets. And over here on the right, you can see there's 2 columns, a GDS and an ADS column. Depending on what you're using will determine the recovery period. There are some other tables here, tables 2 and 3. By the way, all of the information that's in these tables can be found in the IRS publication 946 in the appendix. But so we have provided these tables to you as a convenient way of looking up the recovery. And so on this alphabetical index, if I click on Q, it'll take me to that portion of the table where I've got assets that start with the Q, and you can see qualified improvement property is 15 or 20, you see. I'm going to close that. And so if I was to change this method to an ADS method, and let me just show you one example here, like AA. Now AA is an ADS method, but it takes the bonus. And AA, that's a straight line method essentially. And I'm going to go ahead and change that, and I'll hit the tab key. Again, I see that warning that bonus only applies to assets with a 20-year recovery or less. So I'll go ahead and click OK. And then you see it automatically fills in that default recovery period of 20 years. So that's how that works. Okay, I'm going to go back to my PowerPoint. And at this point, I am going to give it over to Ann Doney, and she's going to talk about this proposed legislation here. There we go.
Thank you, Bob. Appreciate it. Thank you very much. So yes, this proposed legislation, I saw a few questions in the chat about it because it is rapidly evolving. There is HR 7024, the Tax Relief for American Families and Workers Act of 2024, that initially came about the 19th of January. And as of last night, the House passed the bill at 8:33 p.m. and it's gone on to the Senate. At this point, we don't know when the Senate's going to take it up, if they're going to propose changes, when it might pass, but we are preparing an update for it. So let me just talk quickly and tell you what's involved in it. As many of you probably know, 100% bonus is extended for 3 years under the bill, retroactively to 2023 and then through 2025. Now, the 2023 application of 100% will be a taxpayer election. I would think taxpayers, a lot will take it, but how you're going to elect it and all that is to be decided by the IRS and other practices, right? That's not in the bill. That will be revealed later once it becomes law, and then they put the methodology into practice. Now, for 2024 tax years, the bill has Section 179 expense limits increasing and then continued to be inflation indexed in 2025 and after. So how are we going to help you? Well, as soon as the bill is enacted, we will provide a service update to the 2024.1 release. So do have that release installed because it will be a service release that updates that release. Now for 2023, you can change your 2023 assets to 100% bonus already. And I'm going to show you how to do that. But I first want to just point out there is more details than I just covered in some Q&A, and that's going to be in the link in that document that we have shared for download. It's on this SAGE Community Hub that Bob has talked about, and it has some Q&A questions about what are the proposed changes, a little bit more detail than I just gave you. We posted this 10 days ago. And then additionally, stay on the lookout for release notifications here. If you're up to date, you can get a release notification through your auto update system. But the other method is to come to the Sage Fixed Assets Announcements Forum. And if you don't already have if you haven't turned on notifications, turn them on. So if it looks like this, turn forum notifications on, go ahead and click it. After you're logged in, anyone can create an account, and then you will receive an email of these notices as they come out. And you can see they're not super frequent. It's not going to overwhelm your inbox, but you'll be you'll know as soon as it's posted that there's an update available. Now, talking about changing the existing assets, I want to show you here in the application. Let's say, so if you have 2024.0 or 2024.1, like I have installed here, you can currently go to your editions. And in fact, I created a group here of 2023 editions with bonus only on them. And so these are my 2023 assets. I'm sure yours are much more numerous than my example company, but here they are, and you can see the acquired value is 32,000. The bonus is 26, so it's taking 80% bonus. You can see by the grand totals, 134,000. So select an asset, any asset in that group, and then go to your 168 allowance switch feature. I just say select an asset, because if you have nothing selected, I just want to point out it is disabled until at least one asset is selected. Open that up, and I can say selected assets or the group I've got selected. The results will be the same here. Select the tax book, or if you're using another book, whichever book you're using, put in the year, and it's only going to change assets for that year, but of course my group is already limited to assets that I placed in service that year. And I'm going to leave it on the default to change to 100%. In this case, it's going to tell me, remind me to be sure all assets in the group qualify, because you may have added assets in 2023 that don't qualify for bonus, like a building, right? That doesn't, not QIP that has the shorter life and qualifies, but an actual building or improvement that is not a qualified improvement. We've done that with our group. We say, yes, we want to continue. And then it does, because this is the current release and the current law. It will have this message saying it only applies to assets with longer production periods in certain non-commercial aircraft. And that is the current law. But you can continue. So if you want to continue, click OK. You know, if the law passes, you want to continue, because now it's an option, assuming the law passes, that you can select it. So once you finish it, click Cancel. This screen will refresh. You can see regular depreciation this round has gone to 0, but the 168 allowance has gone to 154,000. So do recalculate, your regular depreciation through 12/31/2023, because like in this example, I have an auto here. Actually, it's calculated correctly. I think I just forgot to calculate it before setting this example up. But it doesn't hurt to recalculate it again, but you do not have to. So that covers the tax updates. And now I'm excited to talk about Sage Fixed Assets Ally. This is the new AI help feature that we added in the product in this release. It's available right here on the asset list, in depreciation, and in our tracking module. You can ask questions about either product from within either application. So what we've done is we've trained Ally, or you can call her Allie, whichever you like, on our user guide and all of our depreciation help topics, and a lot of those knowledge-based topics, ones that we thought would be helpful to customers, over 400 of those. So she is trained on those. She's read all those. The user guide itself is 532 pages, I believe. I know you haven't read it. I haven't read it. No one wants to read all that. So Allie has read it all. And what I want to do now is just play a short video of how she works, only 2.5, 3.5 minutes. And then we'll come back with a few follow-up comments. All right. So that is the overview on Ally. And the funny thing is that, remember that answer that popped up that said 60 years maximum? Well, when I was recording that video, I didn't at first catch that she said for custom methods. And yeah, sure enough, for custom methods, she was right. That is the maximum number of years for a custom method. So it's some other methods like straight line, you can go up to 99 years and such. But that being said, I do want to point out that it's not always perfect, but we will try to improve over time. So the training of her will happen over time in the background. So you should see answers improve over time. So if at first you don't like it, come back and give it a try later. And do realize that rephrasing a question can slightly help her to give a better answer. And I hope you find it helpful. At this point, I'm going to turn this over to Ed, who's going to follow up on the next topic for us.
Good afternoon. My name is Ed Williams. I am the sales engineer for Sage Fixed Assets. And can you let me know if you can see my screen?
I can see it.
Okay. So what I am going to discuss today is the new PO module, purchase order module that we put in to create assets out of Sage Intacct. In the previous versions, we had already incorporated the accounts payable module, and with the release of 2024.1, we have done the PO module. Now, this is only available in subscriptions, and also you can create your asset templates inside of Sage Fixed Assets that you can send up to Sage Intacct that will get the dimensions of those assets that you want to create. So the first thing you would want to do is go in, and I'm going to demo this, is click on Preferences, File Preferences, and select the Sage Intacct posting as your favorite. Once you do that, then the Intacct setup is going to show up inside of your fixed assets depreciation application. And now this is where you would go in and enter your web services information for your company ID, user, and password. That is going to allow you to put your XML information in there to send up to Intacct to be able to create those assets. Then you can do your posting and your create asset link. Now I am going to minimize this, and I am going to go into the application. This is the Premier Depreciation application. So the first thing you would need to do here is to go in Preferences, and you would select Favorite Links, and you would select your Sage Intacct posting. Once you do that, now you can go into your File, Edit Company. Now your Intacct is going to be there, your Intacct setup. Now this is where you would enter your web services information, not your normal Intacct login that is assigned to you to go into your companies. Now I would check my connection. It says that my connection is good. Now in the previous version, the customization was actually only for the AP module, which appeared here. But now that we've incorporated the purchase order module, we've added a new tab. So now you can create your XML files to send up to Sage Intacct. You would do one for your accounts payable and also for your purchase order. And this is the location that it's going to put those XML files. Now the next tab is to go in and set up what I want to post to my general ledger from Sage Fixed Assets. This is the minimum that you can put in, okay? Now in the previous version, we only had the AP module set up, but now we've incorporated to activate the purchase order import. If I deselect this, then it is only going to allow me to create assets from my AP module. So I'm going to go ahead and do my PO module. Now you see this is the information that I want to pull down from Sage Intacct. So I'm going to click OK. That's already done. So I'm going to click OK now. Now, in order for me to get those assets that I've identified in Sage Intacct, that is going to be used from my PO and AP module, I am going to go in and click on links, additional links in my Sage Intacct. It's going to close my company. Now it already knows that I am going to connect to Cafe Noir. If there's another company that you want to connect to, then of course you would select the database that that company would be located in, then you would select the company. Now I'm going to tell it to get that Sage Intacct information. So it goes out, it looks for everything that has been flagged in my AP and PO module in Sage Intacct that says create assets. Right now, these are the assets that I have flagged. I can either select one asset or I can select all assets. I'm going to go ahead and select all assets. And word to the wise, when you start creating your assets, you want to assign a template inside of Intacct so that it will be able to use that inside of Sage Fixed Assets, that template. So you notice I only have one template assigned and the rest of them are empty. So I'm going to go ahead and select all of these assets. Now I'm going to validate. Once I go through and validate, it's going to show me what this information is. Now you see here, it tells me that the template is not valid, meaning I don't have that template created. And the class exceeds the maximum field. That means that it's just going to be truncated. This is good. It's still going to create the asset. Now I'm going to tell it to create this asset inside of Sage Fixed Assets. So now it's created 2 of the assets, 3 of the assets, 4, 5 of the assets. Now I'm going to tell it to close because all of my assets have been created. It gives me a recap. So I close that and it tells me that my assets were created and I now have 5 new assets. So now when I tell it to close, I open Cafe Noir back up or whatever company you may be using. Those assets that were just created are now going to be at the end of my list because they're new assets. So here I can go in and double click on those assets. Now, you notice here, it created this asset. I can also go in now and look at the source document that created that asset. If you want to look at the source document, you have to be logged into the Intacct application with your user ID and password that was assigned to you. So if I click on this, it's going to take me to that source document. Before I do that, let me show you what the result of the history is. So now if I click on history of this asset, you notice here, it goes and tells me that asset was imported the day I imported it, and it came from Sage Intacct. Now I go back to main, and if I want to open that source document, I click on open source document. I'm already logged into Intacct. Well, I thought I was already logged into Intacct. I am logged into Intacct. Okay, now just slow. Now this is the source document that was used to create that asset. Now if I close this, then I know now that I have this document, I have this asset, it was created from Intacct, I have the history of that document. Now inside of your custom fields, anything that is a dimension in Sage Intacct that you want to show up in Sage Fixed Assets, if I click on class and I have a smart list created and I click on that smart list manager, then anything that is in Intacct, that's a dimension in Intacct, it will show the import button. That way, if I add or remove any of those dimensions out of Intacct for my classes, my GL numbers, departments, it's going to update that information. So everything that is a dimension inside of Sage Intacct, if I have the smart list created, and it will pull down that information from Sage Intacct. So that is my presentation for the Sage Intacct integration, and I am now going to turn this back over to Bob. There you go, Bob.
Hey, thank you, Ed. Most excellent. You know, Ed, the Sage Intacct comes with several core applications, and you referred to a couple of them, purchasing and the accounts payable. There's also a general ledger and a few others. But the Sage Intacct customer also has the ability to get a license for additional plug-in modules. And I know
Correct.
one of those is to manage fixed assets.
Correct.
And so the question comes up, why would a customer prefer to use Sage fixed assets rather than this fixed assets module that they can get a plug-in for? Do you have any thoughts about that?
Yes. Well, normally when I'm doing demos, customers will ask that question also. We have put together a comparison sheet that shows the Sage fixed assets depreciation, the independent module, which is what I'm presenting, and the Intacct module that you can purchase. Now, in the Intacct module, it only gives you limited books that you can use. It only has certain depreciation methods that you can use. If you're just using straight line for your GAAP or internal book, then you have to know those formulas. You have to actually put that calculated information into the application for Sage Intacct. Whereas in Sage Fixed Assets Depreciation, we have already built in over 300,000 IRS rules and regulations, also 7 books where you can go up to 20 books, and we have over 50 depreciation methods. So inside of Sage Fixed Assets Depreciation, you know you're always going to be in compliance with what the IRS says. If you're using the fixed assets module that is in Intacct, cross your fingers and say a prayer.
Okay. Thanks, Ed. I appreciate that.
My
Now,
pleasure.
what we're going to do is we'll finish up here with tracking. And I realize that not everyone, in fact, maybe not, perhaps most of you do not have a license for the tracking program. I'm not sure exactly, but some of you do, and many of you probably do not. I encourage you, though, to stick around for this last bit, because this is interesting. This asset maintenance feature, which actually came out late last year, gives you a lot of functionality in the tracking program that was not there before. And you might want to see here what it does. So this asset maintenance feature equips you to monitor 2 key resources, and those 2 are time and money. And so it gives you the ability to track the scheduling of maintenance events, and you can track your expenses that you're incurring with these maintenance events. Now, you know, normally we think of maintenance, whatever we spend on maintenance, as being a revenue expenditure rather than a capitalized expenditure. And what I mean is we're just going to write it off on the income statement as part of doing business for that year. But you know, sometimes you may be working on a maintenance event and it kind of gets away from you, so to speak. And maybe you start spending more money than you anticipated, and it turns out to be maybe a restoration where you're restoring the asset back to its original state or something like that. Well, this becomes then a capitalized expenditure. And these capitalized expenditures typically fall into one of 3 categories: adaptation, betterment, and restoration. And if that happens, you really only have 2 options. You're either going to create a new fixed asset for this improvement that you made or whatever it was that you did, or you're going to take an existing fixed asset and you're going to edit the book value. So you'll increase the acquisition value, you'll maybe change the estimated life on it and do things like that. So let's talk about how you add a maintenance event. And what we've done here is we've given you 26 fields that you can customize. And then every time you create a maintenance event, it's going to be assigned a unique number. And that number is going to be composed of the system number for that fixed asset plus an extension number. So each one has got a unique number. Every maintenance event will be assigned an event state, and there are 4 possible states, as you can see here on the slide: upcoming, overdue, completed, and closed. Now, remember I said that you got 26 fields? 2 of these fields are mandatory. And so you must enter a description. You must also enter the due date. That's mandatory. Now, you could customize other fields to be mandatory as well, but these 2 are mandatory right out of the box. There's also a notes field where you could add some verbiage about the maintenance event, and you can also create smart lists for your maintenance information fields. You can customize the display of these fields to show only what fields that you want to see on the screen, and you can put them in any order that you like. Now, I think here what I'm going to do is break away from the PowerPoint and go into my tracking program and show you this. So I'm going to pick out an asset here, maybe like number 13, the parking lot. And I'm going to go into the detailed view of this asset. Now, there are several ways of adding a maintenance event. One way is from the navigation pane. You can see a bulleted task here, add maintenance event. I could go up here to the maintenance pull down menu and select it from there. Or if I'm here in the on the main tab, you'll notice on the right-hand side of the main tab, there's this button that says Maintenance Events. So if I click on that, that'll open up my dialog, and look at this panel of buttons on the right. There's an Add button. So I'm going to click on that Add button, and I'm going to, remember I said description and due date are mandatory, so I'm going to type in here, seal cracks. And I'll tab over, and I'm going to put in a due date of the beginning of this year. Now, of course, you'll recognize that's a month ago, and the program notes it as overdue. This should have been done a month ago. Estimated cost, I'll just put a figure here of 1,000. I'm not going to take the time to fill in the rest of these fields, but look down here at the lower right corner where it says maintenance capitalize. So you remember I said to you, you had a way of tracking these expenditures in case any of them become, fall over into that category where you would capitalize it. So right now it's defaulting to do not capitalize. In other words, treating it, like I said, as a revenue expenditure. But if I click on the drop down arrow, I can see I've got a smart list where I could change the status of this to maybe review, ready to capitalize, or capitalize. See, I'll just leave it here with the default. And then you have a notes section here. And so maybe I'll type in a note like cracks discovered upon last inspection, something like that. And I'll click add. And so now I've got one maintenance event, and you can see it's in the overdue state. Let me add another. And this one I'm going to call power wash. And I'm going to put in a due date of next year. Again, I'll use a figure of 1,000. And I'll click the add button. Yeah, so now I've got 2 events here. I'm going to close my dialog. I'm going to go back to the asset list view. Okay, another improvement that was made along with maintenance, the asset maintenance feature, is this new function button that you've got. So we had an inventory function that was here all along because that's the main reason why you buy the tracking program, is to perform inventory. But right below it, you can see there's this new maintenance function that's been added. Here I've circled it so you can see it better. And so when you go into this, one of the things that you can do is run this asset review report. There are other ways to run the review report, the asset review report, but this is one way, and it might look something like that. And so the tools that you have in the maintenance function, you give you the ability to view maintenance events by asset group. And so you could send just a group of assets that you're interested in to this window and look at them. You have some options here. You could filter the events by the event state. You could filter them by a range of dates. You could export these to Excel, and you could use it to generate a work order. So again, let me break away and from the PowerPoint and go into the tracking program and show you this. Right now, I'm in the assets function. I'm going to click on the maintenance function down here at the bottom of my navigation pane. You can see I've got these two maintenance events, and I know about them. I just created them a moment ago, so you can see them. Over here in the navigation pane, you can see there's a bulleted task, asset review. That's one way, not the only way, like I said, but one way of opening up that report. So notice up here at the top, I've got the group all assets. It defaulted to that group, but I could change the group of assets that I'm sending to this window. Below that, I have a way of filtering these by whatever event that I'm interested in looking at. Over here on the right, you have a way of filtering the events by a range of time. I don't have anything selected here, but down at the bottom, I've got an export to Excel button. And if I click on that, look at this, it'll ask me, well, do you want to include notes in your spreadsheet? And I'll go ahead and put a check there. I'll click OK. And I'll give it a name here, maybe here for this. I'll call it maintenance and click save. And so here this Excel opens up with all of my events here. Now, isn't that interesting? Did you notice I had not selected any of the events, and yet all of them came in here? And that's because our programmers have decided that if you don't have anything selected and you click that button, then you must want everything. Otherwise, it's only the events that I selected. And here over here on the right, you can see there's that note I gave to that first event. I'm going to go ahead and close my Excel. And maybe I select one of these, like that one that's in the overdue state. I've got that one selected. Notice down here in the footer, there's a button that says work order. And so if I click on that, it will open up my browser and create this form for me to use to generate a work order for that. Okay, I'm going to go back to my PowerPoint here. Okay, on this slide, and also if you downloaded a copy of the handout, you can see this link where you can see other videos that maybe provide more detail than what I did, because we're just limited here with time on what I could show you. I don't know that we ever did polling question number 1, quite frankly, but here is polling question number 2. We kind of skipped over that. And I see that Whitney has launched the poll. And so you can go ahead and vote. Using the new asset maintenance feature allows you to monitor the dates of the events and their cost. True or false? And let me take a look here at the results as they're coming in. About half of you have voted now. More than half have voted. Okay, Whitney, you can go ahead and close the poll. That's fine. Thanks.
Yes, Bob. I was the one that forgot to launch poll number 1.
Well, that's okay. And because we've run out of time, I've only got a couple of minutes here left. But the answer, of course, to that is true. And so that is a new feature that we're kind of excited about. And so I wanted to show that to you. So here's what we did today. We covered some of these tax updates. You saw I started off with the audit advisor. It has been updated for this year with this new version. And we covered these other things like the tax forms and worksheets, the limits to depreciation that are indexed to the inflation rate. We saw also how the program will now help you more quickly create a QIP asset if you need to. You heard Ann cover the proposed tax legislation that we may see. We don't know yet, but I think it passed the House last night, didn't it, Ann? And I think we're now going to see what the Senate does with it, right?
Correct, and we will have an update out for it once it becomes law.
And then Ann also covered Ally. Now, I know she started off by referring to it as Ally, and I know why, because we know that the developer had told us that that was his preference. He wanted to call it Ally. But you know, I personally kind of personify Ally, and so I call her Ally. And then Ed did an excellent job showing us how you can integrate purchases that you make through the Sage Intact program and create the assets for those in the Sage Fixed Assets program. And then I finished up here with the asset maintenance. So that's what we did. You know, let's see. I don't know who's monitoring the questions, but and I'm not sure we have any time for questions, quite frankly.
We have time for one.
Maybe one. Did you have a question there you wanted to take, Ed?
If there's any questions out there.
There have been a lot of questions coming in. We have been able to proactively answer some. And we will certainly get back to people via email, right, Bob? If we did not get to your question.
And by the way, Ann, I see it's now right on the hour, so I think we're going to have to end it here. I did want to point out to you that we do have a couple of other slides here on links to Sage University. You heard me begin by saying I'm a trainer at Sage U. And thank you for taking time out of your day to join us. We enjoy doing this and look forward to seeing you again. Bye-bye, everyone.